Talking about investments in the oil and gas sector and the money flow of capital, what do you think about listed companies that make investments into oil and gas assets versus an oil and gas company doing an IPO or an RTO, like we saw with the example with Chris?
Well, I think certainly that it's going to depend on the amount of work that's being done, and certainly on the IPO side, when you start off and you're looking at that initial type look at assets and putting it in the filings, there's a lot of critique that goes on, and there's a lot of back and forth. I mean, the SGX or the SEC or somebody, whoever's receiving this work, basically does a lot of interaction with the not only the consultant but the company, and there's a lot more credibility. So I think it really boils down to what level of work was done at the company for the company at that time as to how good the investment would be.
Do you see any creep? Creeping into the industry from other listed vehicles, listed companies?
If I may say that, yes, definitely. I mean, we see sometimes that some of these companies, they sort of like reinvent themselves. First, they are maybe a textile company or whatever, and then suddenly they announce one day and say, we are going to oil and gas. Just to add on to further what Scott says, because if you do an RTO or IPO as an oil and gas company, there's mandatory requirements to get your due diligence done, commercial, technical, and legal. But if you don't do that, and there's like you said, buying an asset through contract. We hope that they do that, but sometimes they do not. There's no mandatory requirements. But if you're an IPO or an RTO, it's mandatory.